And from a 99% probability of a rate cut, we've dropped down to 57%. The rate cut in September, which we've been looking forward to for months, is becoming less and less likely, and that's something you can really feel in the market right now. But before we get into the details, I'd really appreciate it if you could give the video a like and leave a comment so it reaches more people, because it's Friday today, and you know, Friday is the worst day for a YouTube video. There's usually not much happening on YouTube then, but you can do your part to help. I'd say September will decide whether we really continue on this path or if we'll see another harder crash, tougher corrections, and then experience an upward trend again. September is going to be extremely decisive. Historically, September is actually the worst month in the crypto market, and that's mainly because of this summer slump. For Bitcoin, it's the worst month, and in the stock market, September is usually the worst month as well. Those are already data points that definitely speak against us. What's also going on now, the reason we're dumping like this, is that we've all been expecting to see the first interest rate cut in September for sure. And with the first interest rate cut, we would get more liquidity in the markets, which would be positive. The problem is, a few economic data points have changed, and the Fed itself has now said that, according to the current data, there's no reason for a rate cut. And that's really bad, because as a result, the survey numbers have already dropped from 99% to only 57% in some cases. And that's really tough, because we want a rate cut, we want fresh liquidity here. Fresh capital is especially important for altcoins, because right now in the US, we still have a restrictive monetary policy, and as a result, some of our money is being withdrawn. That's exactly why assets like gold and Bitcoin are performing well, but there's really nothing left over for the altcoins, because they're simply risk assets. And people only start investing in risk assets when a lot of capital is actually being pumped into the markets. That's why it's going to be really interesting to see what happens in September. But I could also imagine that maybe that's kind of the plan, that the Fed says, hey, maybe there won't be a rate cut after all, and the poll numbers drop. We see a drop, and maybe starting in September, things could take off again if rate cuts do end up happening. One of those two things is going to happen. Either we're already pricing in that we won't see a rate cut, and then if we do get a rate cut, things will explode. Or the other scenario, we price in a rate cut, and then there will be a sharp brief crash when the rate cut actually happens, because it'll turn into a sell the news event. Honestly, September is going to be extremely decisive for the coming months. Right now with Bitcoin, you have to say we're at a really nasty spot. We've actually formed a double top here, though it doesn't have to play out that way. I already thought last time that this was the top, but it wasn't. We went a bit lower again. And here you just have to say, take a look at this. Back then, this was that grueling phase where we kept coming into these regions very often. By now, this is no longer a resistance, it's a support zone. We're standing here, and it's incredibly important that we don't break down from this level. If we break below this level for good, the next target could be something like $95,000. Currently, we're still above that level, and for now, things are looking pretty good. And also, when it comes to liquidation here, we can see that there's not much capital left below us. Most of the capital is actually up here, right around $119,000 to $120,000. That's why it would make sense for us to start rising again now, but as you can see, the market is currently behaving a bit counter-cyclically, and we're simply in a downtrend here. But it's also extremely important that we break through this level properly. It would be great if we could break out here in the same way. If that happens, then we could head back towards $115,000 to $116,000, and from there, the target of $119,000 to $120,000 will probably be the next thing to aim for. But at the moment, things are looking a bit critical again. But what has to be said is that on the weekly chart, we're still above the 20 EMA on a weekly basis, and of course still above the 50 EMA. And you should basically remember this, these two zones are extremely important. Because here's the thing, and you should remember this, if we fall below here, in this example, $108,000, then it's very likely that we'll also test this zone at $95,000. Because you can see it, once it fell below here, bam, it tested this area again, but also found resistance here, and from there was a strong bounce. You have to admit that too, but generally it's really a bad sign if we fall below here even once. If we really break the support at the 20 EMA on a weekly basis, then it goes straight down. But currently, as I said, we're still well above it. We're still in a bullish impulse, and we also have a good support zone here at $112,000. But both of these simply have to hold so that we can confirm the next upward trends here. And I also find this here very, very interesting. Because here in blue we can see how crypto Twitter is feeling. Whether they're bullish in times like these, they're bullish when they're up here so high, or whether they're bearish, and you can see 80% of crypto Twitter is currently bearish. 80% of crypto Twitter thinks we're going significantly lower right now. And you know exactly what happens when the majority thinks that, right? then we might see another nice upward movement. So it's actually a good sign, and I try to think counter-cyclically here because that's usually the right approach. Yesterday, the news also came out that the US Treasury bought back $4 trillion of its own debt. This is the largest buyback in US history. And you have to realize, for such massive buybacks, you need liquidity and you need money. And that's the thing. This year, the US has to refinance a huge amount of debt. And because they have to do that, it's very likely that, conversely, they'll also have to print money. And that makes interest rate cuts more interesting and more likely. And somehow I have the feeling that now, on purpose, a few bad data points are being released so that it looks like the Fed won't cut interest rates. And that's why we're seeing a correction for now, a little summer slump, but on September 17th, will it finally happen? We see an interest rate cut and the markets go through the roof. Somehow I'm leaning toward this scenario. But what you really have to keep in mind here is that inflation is back above 2%. Today, there's also a speech by Jerome Powell. The thing is, inflation dropped briefly, but now it's gone up a bit again. And that's actually more of a bad sign. Jerome Powell made it very clear, we won't see a rate cut until we're below 2%. And if a few other data points really deteriorate, then honestly, the Fed shouldn't be making any rate cuts either. Because if they do it anyway, investors will lose fundamental interest in the US, and in the long run, that would be much, much worse. Somehow, I still tend to think we'll see a rate cut, but as I said, there need to be a few other data points that definitely have to work in our favor. Because if more data comes out now that doesn't work in our favor, where inflation continues to rise and so on, then there really shouldn't be a rate cut. But I'd be interested to hear your opinion. What do you think? Will we see a rate cut? Because as I said, we're down to almost only 60% probability here, so it's getting more and more interesting. And last week we talked about the USD1 Stablecoin, and that's the stablecoin from Trump's company. And the USD1 stablecoin reached a market capitalization of $2.2 billion within 90 days. That's the thing, the USD1 stablecoin from Donald Trump's company will very likely be used in the future for political purposes, for the US economy, and so on. All of this runs on Ethereum. And I told you, you have no idea what kind of impact this actually has. This news about the USD1 stablecoin is insane and will open up completely new doors for us here. I told you this, and I still stand by that opinion. It also says here that Coinbase will soon launch the USD1 stablecoin, because the interesting thing is, the stablecoin is still not live. It is already being used in part, but not really applied yet. And yet, the USD1 stablecoin already has over 500 million in daily volume. That's crazy. It's so successful, especially since it won't have any regulatory problems anymore. It will very likely also be integrated as a means of payment in government activities in the US and so on everywhere, and that opens huge doors for us. And what I said is, if this is well received, other countries will follow suit, other countries will also issue stablecoins in their own currencies and simply follow the US here. And that's exactly what's starting to happen now, because we see that the EU is planning to launch the digital euro either on Ethereum or on Solana. At least that's what they're currently considering. And as I said, this opens doors for us that are gigantic. This brings an enormous amount of money into this market, regulatory clarity, and it also brings us a great deal of trust. And that's exactly what I meant. It's like this domino effect, because Trump is getting so heavily involved in the crypto market, other countries see that it's working and they follow suit. Extremely positive development. What do you think about it?